You wake up on a sunny morning and brew a fair trade coffee in a solar-powered kitchen. Your commute is a drive in an electric car, passing a wind farm on the horizon. At work, your company announces a new plan to go carbon neutral. All these everyday choices and innovations reflect a growing idea: eco-capitalism. Eco-capitalism, or green capitalism, is the belief that we can harness market forces to solve environmental problems. In simple terms, it treats nature as nature capital, a valuable asset, and it uses market-based tools like taxes or trading systems to protect it. Instead of seeing capitalism and environmentalism as enemies, eco-capitalism tries to make profit and planet work together. It asks, can making money help save the Earth? Eco-capitalism is all about using the mechanisms of capitalism, investment, consumer choice, innovation, pricing, etc., to address environmental challenges. The core philosophy is that markets, when guided correctly, can encourage companies and individuals to reduce pollution and conserve resources. For example, if polluting becomes expensive, businesses will compete to invent cleaner technologies and consumers will choose greener products. Governments play a role here too by setting the rules of the game, if you will, so that the sustainable options win out. In an eco-capitalist world, economic growth and ecological sustainability aren't opposites, they become partners. Proponents often point out that market competition, fueled by the rise of renewable energy and electric cars, showing that green innovation can actually be profitable. Tesla, for instance, grew from a niche electric vehicle startup to the world's most valuable automaker by 2025, proving that big money can be made in clean tech. The hope is that entrepreneurs, investors, and consumers motivated by profit or preferences will drive a green revolution faster than government regulation alone. But does eco-capitalism work in practice? Let's break down a few key ideas and tools that define this market meets environment approach. One major mechanism is making polluters pay for the emissions that they produce. For example, carbon taxes or cap-and-trade systems put a monetary price on each ton of carbon dioxide that's emitted. This is a form of full cost accounting. It holds the hidden environmental costs of pollution into the price of fossil fuels and goods. The idea is rather straightforward. If it costs money to pollute, people and companies will pollute less. Canada's carbon tax is a real-world example. The Canadian federal government introduced a nationwide carbon price in 2019, starting at $20 per ton and rising each year. As of 2024, it's set at $80 a ton of CO2 and will climb to the $170 a ton by 2030. This means Canadians pay a bit more for gasoline and heating fuel, but all the extra cost is because of the carbon pollution. The revenue often gets recycled back as rebates to citizens, but the key point is the incentive. Cleaner energy becomes relatively cheaper than dirty energy. Carbon pricing uses the market to nudge behavior. For instance, encouraging businesses to invest in efficiency or renewable power to avoid paying for emissions. For large industries, cap-and-trade systems create a carbon market where companies will buy and sell emission permits, rewarding those who cut emissions and letting more efficient firms profit by selling their extra permits. This approach has spread worldwide. By 2024, 24% of global greenhouse emissions are covered by a carbon price, up from just about 7% a decade ago, showing how mainstream this eco-capitalist tool has become. Eco-capitalism also relies on the power of consumer choice. The idea that if enough people vote with their wallets for green products and services, companies will race to meet that demand. Have you noticed more eco-friendly options in stores lately? I sure have. Everything from biodegradable toothbrushes to plant-based burgers exist because consumers signaled that they care more about sustainability. Green consumerism treats shopping as a bit like casting a ballot for the planet. For example, in Canada, you can choose to pay a premium to get your home electricity from renewable sources through providers like Bullfrog Power. Bullfrog Power is a Canadian green energy retailer that makes sure the electricity you pay for comes from wind, solar, or low-impact hydro sources. Essentially, you're paying extra on your electricity bill to support clean energy. And thousands of households and businesses do this, creating a market for renewables. Similarly, many people now buy hybrid or electric cars, organic foods, and eco-certified products. This green demand pushes companies towards sustainability because there's profit to be made in being green. It also sparks a branding race. Companies advertise carbon-neutral shipping, cruelty-free cosmetics, or recyclable packaging to attract eco-conscious buyers. Eco-capitalists cheer this on, arguing that consumer-driven change is faster and more innovative than waiting for laws. However, critics caution that not all that glitters green is gold. Greenwashing, or making false or exaggerated environmental or eco claims, has become kind of common, which we'll discuss a little bit later. A more technical pillar of eco-capitalism is the push for accounting methods that factor in environmental cost. In other words, counting nature's value in financial decisions. Full cost accounting means companies and governments try to account for things like pollution, deforestation, or resource depletion when they're making their economic choices. Carbon pricing, like we talked about earlier, is just one example, but the concept is much broader. It includes ideas like triple bottom line, which is people, planet, and profit in businesses, and investment frameworks that value sustainability. In practice, this shows up as ESG investing, where investors consider a company's environmental, social, and governance performance, not just its profits. This trend has exploded in recent years. By some estimates, over $35 trillion in assets are managed under ESG criteria. Big institutional investors, from pension funds to BlackRock, now evaluate carbon footprints and ethical practices, not just immediate returns. In Canada, for example, many banks and funds offer green investment funds or sustainability-linked portfolios. The Canadian government even issues green bonds to fund climate-friendly infrastructure. One notable initiative is BDC's Climate Tech Fund, a $500 million venture fund to support Canadian clean technology companies. The logic here is classic eco-capitalism. Redirect capital towards sustainable businesses, and you'll accelerate solutions while earning returns. If pollution or unsustainability signals financial risk and good sustainability signals opportunity, then markets will naturally favor green over brown. That's the theory anyways. Although in practice, measuring true environmental impact can be complicated, and not all green funds are as green as they appear. Again, hold that thought. We're going to get to that in just a moment. Perhaps the most exciting aspect of eco-capitalism is how it can spur innovation. Give entrepreneurs a chance to make money solving an environmental problem, and you might just get the next Tesla, Beyond Meat, or revolutionary solar panel technology. We've already seen how Tesla made electric vehicles sexy and highly valuable. Another example is Ballard Power Systems, a Canadian clean tech company. They've been a pioneer in hydrogen fuel cells. Ballard, based in Burnaby, BC, developed fuel cells that can power buses and trucks, and by 2017, Ballard-powered fuel cell buses had driven over 100 million kilometers in service. That is a homegrown success in green innovation, driven by both government support and market demand for cleaner transit. Green innovation isn't just about cars or energy. It spans smart grids, energy storage, plant-based plastics, building materials, recycling technologies, and so much more. Eco-capitalism argues that competition will find the best solutions. If one company figures out how to make a cheaper, longer-lasting battery, they'll capture the market and also help the planet. Governments also assist by funding R&D or offering prizes and subsidies for clean tech, essentially using public funds to catalyze private sector innovation. We'll see this in Canada's clean tech grants and the United States government's incentives for electric cars and wind farms. And the result? The cost of solar and wind power has plummeted in the last decade, due in part to scale and innovation. Even urban design is innovating. Some cities are embracing green architecture, like rooftop gardens and vertical forest buildings. For example, Milan's famous Bosco Verticale towers are covered in thousands of plants. All of these are market opportunities in addition to environmental efforts. Eco-capitalism holds that inventing the eco-friendly future can be as economically transformative as past industrial revolutions, creating jobs and wealth. But this time, it's green. At this point, I would love to know what you think. Would you be willing to pay a little bit extra for a product or a tax if you knew it helped fight climate change? For example, do you consciously buy green products or support policies like carbon taxes? Jump into the comments and share your thoughts. Are market-based solutions the way to go, or do you see pitfalls? Let's get that discussion going. Eco-capitalism sounds promising, but it is not without its serious criticisms. Many environmentalists and thinkers question whether tweaking markets is enough to solve the crisis as big as climate change. Here are a few major critiques coming from various camps, from eco-socialists, degrowth advocates, and climate change activists. Green capitalism can't fix the root of the problem. Eco-socialists argue that capitalism itself is the root of the environmental crisis. They believe that a system built on endless growth and maximizing profit will always find new ways to exploit nature, even with green packaging. From this perspective, eco-capitalism is seen as just a band-aid on a deeper wound. Yeah, you can swap coal for solar and SUVs for EVs, say the critics, but if we keep consuming more and more, we'll just hit new limits. They point out that capitalism tends to commodify nature, meaning it turns ecosystems, water, and even carbon that's in the air into things that can be bought and sold. While eco-capitalism tries to value nature to protect it, opponents worry that that just extends the marketplace into realms that perhaps we shouldn't be going into, that shouldn't be sold. As one critic put it, the problem with green capitalism is that it still treats the environment as an externality, something that can be bought or sold. Eco-socialists and left-green activists often call for more radical changes, changing how we live, not just what technologies we use. They champion ideas like leaving fossil fuels in the ground and redistributing wealth and power rather than trusting market initiatives. In their view, blue-greens, or eco-capitalists, are the mirror of red-greens, eco-socialists, and the two sides disagree strongly. To an eco-socialist, a carbon tax or an ESG fund is just tinkering. They advocate for systemic shifts like public ownership of utilities, rights for nature, or even post-capitalist economies. A related critique comes from the degrowth movement. Degrowth advocates argue that endless economic growth on a finite planet is a dangerous illusion. They note that even green growth still uses resources and energy. For instance, electric cars need mining of lithium for batteries, wind farms need steel and concrete, manufacturing millions of new eco-friendly products still has a footprint. From this viewpoint, the solution is not to replace every dirty product with a clean one, but to slow down, consume less, and live more simply, essentially shrinking the overall human footprint. Degrowthers worry that eco-capitalism focuses too much on efficiency and not enough on sufficiency. Efficiency is doing more with less, which is great, but sufficiency is knowing when to stop. An example would be making cars fuel efficient is great, but if it leads to more cars and longer commutes, you might not actually reduce emissions overall, which is what we call a rebound effect. Degrowth proponents would say that we should invest in public transit and walkable cities, and maybe not everyone needs to be in a car at all, rather than just betting on electric cars to solve everything. They also raise equity concerns. Historically, wealthy countries and individuals caused most pollution, so just selling everyone Tesla cars doesn't solve the overconsumption by the rich. Degrowth is a tough sell to mainstream politics, but it's a core message: consume less, share more, focus on well-being over GDP, stands to contrast eco-capitalism's green growth mantra. Activists focus on climate justice stress that market solutions often fail to address inequity. For example, a carbon tax might be effective, but it can hit low-income households a lot harder through higher fuel bills, for example, unless rebates or social programs can offset that. Cap-and-trade systems and carbon offset markets have faced criticism for letting the wealthy polluters buy their way out of cutting emissions. A climate justice advocate might point out that a big corporation can purchase carbon credits or plant trees somewhere to offset its emissions, while frontline communities, often poor and indigenous communities, continue to suffer pollution from that corporation's factory. In fact, two prominent environmental justice networks, the Indigenous Environmental Network and the Climate Justice Alliance, released a report arguing that carbon market systems will not genuinely cut emissions or help vulnerable communities. Instead, they often protect the fossil fuel industry and corporations from taking real climate action. This critique basically says climate change isn't just an economic problem, it's a social one. If solutions don't account for who benefits and who bears the costs, they can perpetuate injustice. For instance, establishing a profitable market for electric cars is great, but what if poor neighborhoods still have no public transit or are located near highways with heavy pollution? Climate justice activists push for policies like community-owned energy, direct regulation of polluters, and investments in marginalized communities, rather than relying solely on carbon pricing or corporate pledges. Another common criticism is that eco-capitalism often leads to greenwashing, where companies appear sustainable without making meaningful changes. Because there's money in the green trend, some businesses spend more on PR than on actual sustainability. We see examples of this in carbon neutral claims based on creative accounting, or oil companies marketing algae biofuels and carbon capture projects that are tiny compared to their main business of selling oil. The rapid growing ESG investment field has also been accused of greenwashing. Many ESG funds hold the same big tech companies or even fossil fuel companies and just relabel them as green. As analyst Adrian Buller notes, a lot of sustainable finance isn't about funding new green projects, but about managing financial risk or public image. Critics say this lulls the public into thinking progress is being made, when in reality, emissions are still rising. In other words, if everyone pats themselves on the back for buying green products or offsetting their flight emissions, we might delay the true cost of actions needed to cut fossil fuels use deeply. What we would say is business as usual in green clothing. That's how skeptics summarize green capitalism. They call for stricter oversight, clear standards for what counts as sustainable, laws against misleading green advertising, and making sure companies can't just market their way to a good reputation. They have to earn it with real performance. In summary, the critics of eco-capitalism remind us that market solutions have limits. They can be important tools, but relying on them alone may not transform the systems at the speed or scale needed. Issues like consumption habits, power imbalances, and the physical limits of Earth demand broader changes in climate and culture and policy. As climate activist Greta Thunberg, a notable Gen Z voice, she bluntly put it, we can't solve a climate crisis with the same mindset and systems that got us into it in the first place. She's criticized capitalist consumerism and market economics as failing to be stewards of the climate. This brings us to our final part. Where do we stand today, and how do different generations feel about eco-capitalism? So is eco-capitalism winning the day? In many ways, aspects of it have gone mainstream. As mentioned, dozens of countries have carbon pricing, and nearly a quarter of global emissions are under some sort of carbon costing regime. Governments and businesses worldwide talk about the language of net zero emissions by 2050, which often leans on a market-driven tech and finance. Investment in clean energy is breaking records every year, outpacing investments in fossil fuels in some cases. On the surface, it looks like the green market revolution is well underway. But it's a mixed picture. Green industries are booming, yet global emissions have not yet started falling globally at the rate we need them to be. We see a kind of race. On one track, innovation and policy are pushing us towards electric vehicles, renewable power, plant-based diets, etc. And on the other track, population and consumption keep increasing demand. Eco-capitalism is trying to balance these by decoupling growth from emissions, a very challenging task. From a business perspective, there's certainly momentum. By 2025, ESG investing is huge, as noted, tens of trillions of dollars globally. And many corporate leaders at least pay lip service to sustainability. Entire new sectors like the solar industry, wind turbine manufacturing, and battery supply chain have emerged as profitable enterprises. Startups in carbon capture, alternative proteins, and recycling tech attract significant venture capital. Even in more traditional industries, companies feel pressure from shareholders and consumers to have green strategies. In Canada, for example, every major bank has pledged to align its lending with the Paris Agreement, and the government's climate plan relies heavily on pricing and private sector innovation. The market is seen as a crucial partner in meeting climate targets, a textbook eco-capitalist approach. However, public opinion, especially amongst young people, is split. Older generations who remember the smog and pollution of past decades see today's green market solutions as a big positive step. Younger generations, millennials and Gen Zs, for example, while supportive of climate action, are more skeptical of who is driving the action. Surveys show that Gen Z adults are far less enamored with capitalism than their parents or their grandparents. In one 2023 survey, only 29% of Gen Zs, ages 18 to 26, said that they prefer capitalism, while a roughly equal amount, 28%, said that they actually prefer socialism. The rest were unsure. By contrast, 77% of the eldest Americans in that survey preferred capitalism. This doesn't mean all young climate activists are anti-capitalist, but it highlights a generational shift in trust. Many Gen Z climate activists connect the dots between the climate crisis and issues of economic and social justice. They tend to demand more systemic changes, phasing out fossil fuels directly, holding corporations accountable, and ensuring a just transition for workers and communities. We've seen the youth-led movements like the Sunrise Movement in the United States or climate strike protests globally, sparked by Greta Thunberg, and often criticize moderate, market-driven climate policies as too little too late. The phrase blah, blah, blah became famous from Greta mocking leaders for making big promises, often about green growth, and not delivering results on the ground. That said, not all young people reject eco-capitalism outright. Many are actively engaging in green entrepreneurship and innovation themselves. But there is healthy skepticism, a sense that markets alone won't save us, and that perhaps deeper values of sustainability, community, and equity need to guide our economic system. Gen Z has grown up amidst climate anxiety and seen the slow pace of change by the adults in the room. So they are simultaneously pushing for faster action within the system and, in some cases, outside the system. It's an ongoing debate. Can capitalism be reformed to be sustainable, or do we need to fundamentally change the model? Eco-capitalism is essentially an attempt at the former, making capitalism work for the planet. Whether it's ultimately sufficient is an open question that your generation will heavily influence. As we wrap up, we've seen that eco-capitalism offers a compelling vision. One where buying organic, investing in clean tech, and taxing carbon all work in harmony to solve environmental issues. It's an optimistic vision that leverages human creativity and the energies of commerce to build a greener world. We've also discussed the valid concerns that it might not be enough on its own, that markets have blind spots and cannot fully guard the commons without strong public oversight and cultural shifts. In reality, achieving sustainability will likely require both market-based solutions and other approaches like regulations, lifestyle changes, and collective action. The philosophy of eco-capitalism has clearly influenced modern climate policy and business strategy, especially in countries like Canada, where carbon pricing and clean tech investments are central. It's encouraging to see entrepreneurs inventing solutions, consumers demanding better, and governments setting smart incentives. Yet it's equally important to watch out for greenwashing and to ensure that the benefits of a green economy are shared fairly. After all, saving the planet isn't just about new technology or economic tweaks, it's about people and how we choose to live together on this earth. So what do you think about eco-capitalism after hearing all of this? Is it a bold path to a sustainable future, or do you feel it's just green talk and avoids the tougher actions? I'm really curious about your perspective. Do you trust companies and markets to do the right thing if given the right incentives, or do you side more with the critics who say we need a bigger change? Let's have a thoughtful discussion in the comments. There are no right or wrong answer here. This is the debate of our times. This is the debate of our generation and beyond. And finally, speaking of connecting with nature and taking action, I want to personally invite you to join us at Project ReWild and the Forest Bathing Society for an in-person forest bathing session. It's one thing to talk about green economies, but sometimes we need to recharge in the actual green of a forest. If you're in the area north of Toronto, or you can make it, come on over. Come out for a guided forest bathing session in the woods, breathe in the fresh air, and recenter your relationship with the natural world. It's a fantastic way to remind ourselves why all of this matters in the first place. Check out the link down in the description to RSVP for our next forest bathing session. We would love to see you there and hear your thoughts in person. Until next time, my friends, stay curious, stay hopeful, and keep rewilding. Until I see you again, remember I love you. I'll catch you in the forest.